Hello, traders. Hello, everyone, and welcome in a new weekly analysis webinar. Today is the 29th of July, and it's the beginning of a new trading week. Thank you very much, everyone, for joining me today. I can see we have many people from many countries around the world. Good morning to all of you. Good morning, and thank you for joining me in today's webinar. So, of course, as usual, we'll have a quick discussion about the markets, not so quick. I mean, we will be discussing the markets in the next maybe 1 hour. I would really love to have a look on the economic agenda for the past week because we had some good data coming out, okay, on Friday specifically. So we want to know exactly what happened. How would this affect the trading directions during the next period? And how would we trade during this week? Because we are about to witness a very volatile and a very important week when it comes to the economic data. Okay. Guys, good morning to all of you. I can see some people are having some issues with the customer service. I mean, this is a webinar to discuss the market analysis. If you have any issues with your account, I think you should contact your account manager, or you can just contact us on our website or send us an email on the CS@BU Prime. So we have many ways to ask about your account, not in this Zoom webinar. We are here to discuss the markets, and we are here to make sure that we got everything right. So yes, let's start by having a look on the economic agenda here. And yeah, as we said, I would like to have a look on the economic agenda for Friday, because on Friday we had the PCE index, or the inflation index. And as we said during the last week, this is really important. And to me, I think it's the most important inflation measure in the United States at the moment, not because I do love it, just because the Federal Reserve loves it, okay? The Federal Reserve observes the changes in the PCE, let me tell you, even more than the CPI. However, although I was personally expecting markets to be very volatile during this data release, we almost had nothing. We almost had a very minor movement in markets. Let me tell you why. Because basically, markets don't really understand the data, or they don't really know how things will be going on from now on. Okay. So if we check, I mean, those are the four PCE numbers I would like you to focus on. When it comes to the core PCE price index on a yearly basis, it basically came in exactly as the previous reading. So for June, it was 2.6, just which is the same reading as May. So 2.6, no decrease, no increase, but it's still the same. For the PCE price index on the yearly basis, it just went down a little bit from 2.6 to 2.5, which is not very good at the end, because PCE is volatile. The PCE includes the energies and the food items. They are volatile. So 0.1% decrease on the main PCE index, which includes some volatile items, I really see this as not so good. The core itself is still 2.6, okay? On a monthly basis, if we're going to have a look on the core PCE on a monthly basis, it basically went higher from 0.1 in May to 0.2 in June. And the headline as well, on a monthly basis, it as well went up. So we are having some not so clear data at the moment. My personal perception of this data is sticky inflation all the way. So inflation is going down. Generally, if you look at the main trend, okay, it's going down. But on the shorter time frame, I mean, on the monthly releases, we are having inflation going up a little bit. On the yearly releases, we are having some sticky data coming out. So it's exactly the same. So this was a shock to markets. Markets were prepared to sell the dollar and to buy gold, because inflation is going down. We are already going to have interest rate cuts starting from September. So yeah, let's short the dollar. But when the data came out, basically it's not so good in favor of shorting the dollar at the moment. So markets didn't really short the dollar that much, and we are continuing to see the sideways range on the dollar index, just around 104.30, which is the same range we have been trading inside during the whole previous week. So the whole previous week on the dollar index, we have done nothing. We were just, you know, trading around the levels of 104.30, which is not very good at the moment. But I think, and I do really believe that we will be moving higher during this week. Just let me, delay this analysis when we check the charts later on. Very interesting analysis. Thank you very much. Inflation is going down. That's right, 100%. It is going down. No one can say that inflation is not going down, but it's a conversation of whether it's going down as expected or not. So we are not saying that the inflation is not going down. It is going down generally. But we need, to measure the speed of the inflation cooling. Why don't you respond to me? I have a withdrawal request. Brother, it's not here. We don't discuss the account issues here. This is a daily or a weekly analysis webinar. So we are here for the analysis. People are here to listen to analysis. So yeah, I think, no, I don't want to mute anyone, but please, you should ask the proper questions in the proper channels for that. Okay, let's have a look on the economic agenda for this week. And this week is basically from, where is it? Monday 29th till Friday the 2nd, okay? So Monday is not even on the economic agenda because definitely this means that we have nothing. Okay, so today on Monday, absolutely nothing to look for. Starting from tomorrow, Tuesday, the 30th of July, we will be having the German CPI and the European GDP, some things that we must look for, not expecting higher volatility than usual, but it's something that we will have to focus on during the next period. And by the way, going forward and starting, I think from today or tomorrow, I would really advise you to follow our website and especially follow the market analysis page on the website, either in English or in Arabic, because I'll be posting some longer term fundamental views. I mean, if this is the German CPI and it's expected to be released tomorrow after the data, what does this mean on the euro and so on? So I'll be writing more written blogs or contents on the website. It would be very, very useful. I know, because at the end of the day, this weekly webinar shouldn't be any longer or couldn't be any longer than 1 hour. So there are a lot of details that I couldn't really discuss live. However, those more details for people who would like to really learn about fundamental analysis, just follow the website and you will find some really valuable content there. Okay, so that's for tomorrow. And we also have the job openings and the labor turnover index. This is important, as well as the CB consumer confidence. So yeah, I wouldn't really pay much attention to the GDP from the Eurozone and the CPI. However, at 6 p.m. tomorrow, I mean Dubai time, which is GMT +4, we definitely should pay attention to the consumer confidence and the job openings and labor turnover, because it is important data. And yes, we do expect higher volatility than usual. So far, we don't have any surveys for the job openings. However, I think it will be updated tomorrow. Okay. So yeah, that's for Tuesday. I would really say it's a pretty much, average day. Moving forward to Wednesday, we have the Bank of Japan interest rate decision. The moves on the Japanese yen recently was crazy. Okay. So whether they will be hiking interest rates in the near future or not will definitely be decided in this next meeting. So the moves of any yen pairs, including the dollar yen, the pound yen, and all of the yen pairs, will definitely be according to what will happen during this interest rate decision. I mean, expectations are still that they will be fixing interest rates around the same level. However, any hints about future interest rate hikes will definitely support the Japanese yen against all of the other currencies. Okay, so this is definitely something that we need to look for. We have some data coming out from the Chinese economy, the manufacturing PMI from the Chinese economy, definitely something that we should look for. And we have the CPI. We have some data from the German economy, which is the retail sales. We have the CPI from the Eurozone, definitely something that we should look for. Answering your question, do we see some technical analysis in this live conference? Yes, we will. After having a look on the economic agenda, we will definitely have a lot of discussions technically. So if you have any question, leave it in the comment section, or if you have any specific pair you would like me to discuss, just leave it in the section, in the comment section below, and I'll make sure we will answer it by the end of this session. Okay. Where are we? Yeah, here we go. So tomorrow on Wednesday, we will be having the European CPI. We will have the ADP non-farm employment change. We will have the Canadian GDP, and boom, we have the federal interest rate decision. So we will be having a FOMC meeting that should start on Tuesday. It will be concluded on Wednesday, and we will be having the interest rate decision by the Federal Reserve. Expectations are, of course, they will be fixing interest rates around the same levels of 5.5%. So that's not really the issue here, because markets already know what will happen with a 99% confidence level. However, the issue is with any forward guidance that the Federal Reserve members, or of course Jerome Powell, will be providing to the markets, because this meeting will be on the 31st of July. The following meeting will be in September, which is markets are really expecting, with a confidence level, I think, of 95% now, that we will be having the first interest rate cut by the Federal Reserve in September. So in July's meeting, we want to guess, or we want to see any hints or comments or statements by Jerome Powell that the next meeting or the following meeting might have an interest rate cut or not. This is definitely something that will move the markets and will affect the trading. Okay, so that's the top risk event here. Moving on to Thursday, we have the Bank of England interest rate decision. So far, expectations are to start cutting interest rates with a 25 basis points. This is also something that we definitely should watch. Okay, the details of those meetings. What will happen if they cut interest rates or they fix interest rates, and all of those really, really long discussions fundamentally will be posted on our website. And that's why I'm telling you, I would really advise you to watch our website, the market analysis page moving forward, so you will understand more a lot about this. However, here, as we can say, or we can see, it's 25 basis points of rate cut expectation by the Bank of England on Thursday. We have the PMI from the US economy. Okay, guys, let me tell you that this week is really, really volatile week. We have a lot of data. Okay, so today on Monday, pretty much nothing expected. On Tuesday, I would say 4 out of 10 on volatility scale. However, starting from Wednesday, we will definitely see things, moving higher and volatility. We have the FOMC meeting. On Thursday, we have the Bank of England. And on Thursday also, we have the PMI. It's really important. And on Friday, it's the first Friday in August. So it's definitely the NFP day. So Wednesday, Thursday, and Friday, you must, fasten your seatbelts, because markets will go crazy. Markets are expected to go crazy, with the FOMC meeting, with the Bank of England, with the PMI numbers from the US economy, and with the non-farm payrolls expected to decline from 206,000 new jobs in June to 177, which is more cooling of the labor market. Is it possible for you to discuss gold later? Of course. So the ones in red, does that mean we shouldn't trade them? What do you mean by the ones in red? Not pretty sure what you mean. Is this chart accessible to the public? This is not a chart. This is the investing.com economic agenda. What's the significance of all the interest rates, CPI, PMI, etc., that you are mentioning? That's a big topic. The short answer is it definitely creates new trends in the markets. I mean, technical analysis, one common misconception is that people look at technical analysis and they try to predict what will happen in the future based only on technical analysis. Okay, sometimes history repeats itself. So when you have a support or resistance, it might be respected again. However, the previous performance or price action of a particular financial asset is not basically, it's not the only thing that decides what will happen in the future, because you have supports broken, you have resistances broken, and so on. So technical analysis should only and always be a timing tool. You time your entry in the markets. However, when it comes to the major trends, what shifts the markets, economically and so on, it's definitely interest rates, CPI, and so on. So that's why we cover both. We try to know what's the major trend, fundamentally, what will happen in the markets, and then we try to time our entries with the technical analysis. Okay, guys, are you repeating questions? Let's check pound yen and euro New Zealand. Okay. Hello, Chief. Do we discuss some technical analysis in this conference, sir? Yes. It's another repeated question, Emmanuel, because we have already discussed this. However, let's discuss the markets right now. I can see you guys can't wait. So let's have a look on the markets right now. And let's start with the dollar index. And of course, as we do, it's a clean chart. And here is the weekly time frame. And so far, pretty much we are still in the same, that we have been forming. I mean, this symmetrical triangle here. Okay. The previous week was a little bit bullish. So this week, which started on the 15th of July, we touched the lower limit of the symmetrical triangle. The previous week was slightly bullish. Why do I say slightly? First of all, the close is bullish. Okay, this is a white candle, so it's a bullish candle. The close is higher than the open, slightly higher. We also have a slightly higher high and much higher low. So generally, I would say this candle was gaining momentum to break higher. So far, this weekly candle is still starting. However, based on the previous two candles, I would say I'm bullish dollar generally. Okay. On the daily time frame, look at what's happening here. First of all, this is, the lower limit of the symmetrical triangle that we have been discussing on the weekly time frame. This is a previous support. Prices or the dollar tried to break below this level. However, we are trading again higher. So this is a clear false breakout to those two levels, okay? Previous support and the lower limit of the triangle. So yeah, I think during the week, this is the daily time frame, okay? So we are waiting for 5 candles. I think the 5 candles will be higher. I think the 5 candles will be higher. I'll tell you why. This was a drop, really great drop. We formed a base and then we had another drop. So there is some sort of supply here. This is as we call as the drop base drop. there is some supply here, and the supply could be drawn like this. This is the supply zone. Let me just, make it clear. This is on the daily time frame. Of course, it's a huge supply zone. However, we will refine it when we uh, go lower. I mean, this is a supply. We are heading higher, so we might head higher to retest this level again before moving lower. So for the week on the daily time frame, I am slightly bullish so far. Drop. Okay, that's a rally. Wait, where's the supply here? That's a rally, base rally. This is the supply. You can see this is exactly the supply zone I'm looking at. Let's say around the levels of 105.15. It's a critical resistance or supply that we must respect during this week. Anyway, this means that my bias on the dollar is to move higher during the week and target the levels of 105.15. Okay. And that's, the lowest I think we can do. And even on the 4-hour time frame, I wouldn't really say this is an inverse head and shoulders, but it's definitely something, that shows a reversal here. There is some sort of a reversal or a bottom forming here on the dollar. So I would really believe that the dollar is heading higher from here to target the levels of 105.15 during the week. This is a technical analysis, given that we have the PMI numbers to be announced, we have the NFB, and we have the meeting by the Federal Reserve this week, the interest rate decision. Anything can happen, anything could go wrong. But the technical analysis, you know what this means? Okay, if we try to, tie this up with the economic agenda, maybe by the beginning of the week, we should see this upward move before the meeting. And then maybe Jerome Powell will say, okay, yeah, we will cut interest rates next meeting, and then we will have this move lower. This might happen. I mean, it's just, a lot of scenarios could take place. But technically speaking, the dollar is forming a very good support or a very good bottom here. We have the supply zone around the 105. And yeah, I'm targeting the 105.15 during this week. So from this fundamental analysis, what trades can we take on Tuesday, for example? No, we don't do this. Fundamental analysis gives you an overall direction. It doesn't really give you a direction for the day. The intraday analysis has nothing to do with fundamental. Fundamental analysis gives you maybe a move or a shift in trend on the daily time frame or the weekly time frame. But on the, intraday trading, anything can happen. Prices could move higher or could move lower. So intraday trades are basically or should be relied more on the technical analysis. Which pairs this year are looking at? Okay, everyone said dollar index. I love people who are actually paying attention. Okay, moving forward to the euro. What's happening on the euro versus the dollar here? On the weekly time frame, bearish, 100% bearish. So the previous or this candle, 15th of July, most often you will find me that on the weekly time frame, I always look on the previous two candles on the weekly time frame. So this one here, we will just disregard it, the last one, because this is the current week. And the last two here is what we want to look at. What's happening is this one was a bearish one, like a pin bar or a shooting star. We had lower high and lower low, a bearish candle. So it's bearish, moving lower. Even this week is starting already on a bearish tone, and we are heading lower. So I think the euro is bearish on the weekly time frame. On the daily, okay, this is now confusing a little bit. I'll tell you why. On the euro, we are bearish on the weekly time frame, right? However, this last high, let me get you some, yeah, clear color. On the last high here, it was slightly higher than the previous one, okay? So a higher high means that we broke resistance. It means that this downward move is not a reversal. It might be a retracement before heading higher. So yeah, this definitely makes sense with my view on the dollar, because our view on the dollar is that the dollar will go up a little bit to the supply, 105.15, before moving lower. So up and then down on the dollar, which might be translated to a down on the euro and then up. So yes, on the euro, we are heading lower. However, I'll be looking for um, an area where I will be buying the euro during maybe this week. Okay, let me get you some. So yeah, we rejected the levels of 38.20%. That's the daily time frame. And it seems that we will be breaking lower. Where is the level of demand here? I can see there is some sort of demand on the daily time frame here, because it was a rally, base rally. Something here says that we are having demand, okay? However, I'll have to go to the lower time frame to look for the base drop. Okay, so it's basically a drop base rally here. This is the candle base. Why? Because this demand, this upward move here started from this exact candle. So that's the base. So the euro is currently trading at around 1.0837. I believe another move lower of 30 pips is something I really expect. And yeah, maybe if we have a bullish price action from here, we will head again higher. Okay. Okay, that's for the euro versus the dollar. I would really expect something similar to happen on the pound versus the dollar, because yeah, they are both pretty much, the same. So the pound might face some support around the levels of 1.28, and we might see an upward move. Let's wait and see. However, we will definitely wait for confirmation from price action. Okay. Sir, do we get to voice our opinions on this live seminar? Like answer questions you will ask and give us a chance to unmute. I'm not getting. Do we get the? Do we get to voice our opinions on this? Oh, you mean if you want to participate? I don't think this might be an option. Not because anything, because I'm not prepared, so I don't have my speakers connected. But maybe this might be a good idea. I'll look into maybe doing this in the next webinars. Can you say the name of the charts you're looking at, please? It's TradingView. It's normaltradingview.com. However, I'm having it, branded with our colors, which is the white and the blue, but it's the normal um, colors. You only say euro, what? Euro pound? No, it's euro dollar. If I only say euro or pound, or it's the major pair. So it's the euro against the dollar, it's the pound against the dollar, and so on. I don't really look at the euro pound because it's really slow. I mean, nothing happens. All this upward move is only like 60 pips. So you can stay ages in a trade, and maybe get out on 50 or 60 pips. It doesn't really give, good uh, moves or got good volatility. Okay, let's have a look on gold. Everyone's asking about gold. What's happening here? Let's start with the weekly time frame because there is something I would like you to take care of or to take notice of. Previous 2 weeks was definitely a fake breakout. You see this? $24.14 per ounce. That was a huge resistance. During this week, which started on the 15th of July, we moved way higher to 24.85 roughly. However, we came back down and printed this bearish, very bearish candlestick. This is a textbook example of a shooting star, okay? So this is definitely bearish. The previous week was also as well bearish. We moved higher, we formed a lower high, and we definitely registered a new lower low. So gold, the general idea on gold is, or the bias is bearish, okay? Let's remove this resistance. And this is interesting because the rejection that happened here and the move lower was definitely not something that we retailers did. So it wasn't me and you and other retail traders who shorted gold and moved prices lower, because exactly on Friday, the 19th of July, prices moved lower around 2%. This is definitely something institutional. Either it's fund managers, either it's users and producers or anything. I mean, this is a supply zone here that formed because the move lower, this is a great candle. So some institutions shorted gold up here. And I think that even if we moved higher, we will face another some unfilled orders. Okay. What does this mean? This means that if we look here, we will find a move higher, some sort of a base, and a move lower. So it's a rally base drop. And this is a form of supply. Okay. On the 8-hour time frame, okay, that's the move higher. That's the move lower. And in between, that's the base. Pretty simple. Okay. This is where supply formed. And in order to know exactly the limits, we will just, isolate the candles here. That's exactly the supply zone. Some people would really, draw it like this, including all of the tails. Uh, this will give me, a very wide supply zone of, $30. I don't do this. I'll just, take the smaller one. We can, by the way, we can do a webinar soon, an educational webinar, uh, on how to draw those supply and demand zones because they are really good in determining areas of strong support and resistance. However, support and resistance, which is not created by me and you as retailers, no, this is supports and resistances formed by institutions. Because if institutions here want to sell, they will not sell all the quantity or the positions that they need on one shot because they will just not get good prices. So they fill some orders here. When prices go higher, there are some orders here that's unfilled and will definitely push prices back lower. So that's the idea of supply and demand. It's still fresh because it's been formed. Yeah, I mean, it's only been formed new. It's not been tested. So definitely, I would say definitely there are some unfilled orders here of institutional sell orders. So on the bigger time frame, I don't care what happens right now. We will discuss this. But I mean, on the bigger time frame, I would really love, to see gold heading higher. I will definitely short it here around 24.60, stops to be higher. And we will definitely get some good risk to reward around 3% at least or even maybe more. Okay. So yeah, this is just, some educational thing. I'll be very interested to learn about that. Good. Yes, sir, we would love that seminar very much. Good. Okay, so I think I'll have to add this on my to-do list. Beautiful analysis also for gold. Okay, we haven't really discussed gold right now, but let's see what's happening on these smaller time frames. And yeah, again, we are seeing here a rally, or I'm sorry, a drop, a rally here. So there is some sort of demand. Okay. Let me go to the 4-hour time frame. It's a small demand zone here. Okay. So we have a move lower, a lower high. Now we have a lower low and a lower high, a lower high. I think we might go back and test the levels of 2360. What happened next? Wait, I'm looking at this because guys, it's always that I look at the charts exactly when I'm live because I just started my week. So I don't prepare the charts. I analyze live with you, and that's why it's taking me some time here. Okay, yeah, I'm bearish on the short time frame or during maybe this week on gold. I'm bearish. I'll tell you why, because it's a clear downward move. We are having some lower highs and lower lows. Not only this, but also this. Let me remove this. It will be much clearer. This level, which was support, when prices moved lower and we went higher again, that was supposed to be resistance. And what happened here was a false breakout. So a false breakout above resistance means we might head back to support. So yeah, during the week on gold, because yeah, I'm also expecting dollar to edge higher a little bit. So with that move higher on the dollar, we might see some downward moves on gold. Yeah, and this is what I really expect. It would be ideal for me to see a move lower to the 2360 because again, this is some good demand that might give us some intraday trading opportunities, maybe like a bounce higher. And because what's happening here, it's not a price channel, right? It's a wedge. Wait, let me see. Let me see. It's a price channel. It's a price channel. Okay. Where is it? So yeah, the borders of, let me just remove this so to make it clear. Gold is trading in a sideways or in a price channel. So yeah, a move lower is something I would really expect technically on gold. Of course, guys, we mentioned that this is just technical analysis because we are having a tough week ahead. So anything can happen, but technically, I'm expecting a move lower on gold. What is happening on oil? I'm bullish on oil. Nothing to say more than that. I am bullish. Oh, not really. On the weekly time frame, it's bearish. One, two, three, lower lows, lower highs, bearish candlesticks. Nothing really to reject or any support here on the weekly time frame. So the weekly is bearish. The daily is bullish. Why is that? Again, strong move higher during this candle on the 10th of June on Monday. Oil went higher with a 3.5% during one day Again, this is institutional orders. So a move higher, we had the base and another move higher. So it's a rally, base, rally, another form of demand. So there is some base here on the daily. Where should we draw our base? I think that would do it. Okay. On the 8-hour time frame, yes, it seems that this is the base I'm looking at. Just let me refine it a little bit. And we can see that when prices went lower, we are having some sort of difficulty here, rejecting those levels. On the 4-hour time frame, we're having bullish divergence. And yeah, I'm bullish on US oil, at least on, the short time frame, because this downward swing, we didn't have a chance to retrace before continuing the move lower. So during the week, as long as we are trading on the US oil above the last low of 60 or 76.80, I'm basically bullish on the US oil because we also have here what seems to be a higher high. So there is some, buying pressure here. We came back again. It's not so good. The price action here is really messy. So the ideal situation will be we will wait for a break higher above 79.35 to continue the move lower. Because in between those highs and lows, anything can happen. And of course, a break below 76.80 will be, invalidation of the bullish scenario. I think we have covered pretty much everything so far. Please let me know in the comments section if there's anything else you would like me to discuss. The Dow Jones is bullish. We definitely had a huge upward move, so we are expecting a retracement, and off we go to retest the highs again, okay? Is there anything... What is TQ? Is it a thank you or is it a symbol for a financial asset you would like me to look at? It was such an interesting webinar. Okay, this shows that, yeah, we don't have any questions. The S&P 500. Okay, we have here an S&P 500. Let's have a look on it real quick. Institutions just selling the S&P 500 because, this drop, you can see that this drop is strong. Let me get some color here that wouldn't be... Bring to front. Okay, so this move was a fast move lower. We had a base, we had another move lower. So this is a textbook of the drop, base, drop, base, drop. You can see how fast the S&P is moving lower. So I'm not really... It's bearish on the weekly time frame, okay. But I think it will just edge higher a little bit to the 5,500, where it will be a good shorting opportunity. So yeah, the S&P is bearish because it's, it's just lower lows and lower highs. So I think we will continue this move lower. And it's already starting here to show some rejection. Yeah, it's bearish. I'll be looking for a retest back to the 5,390. However, the thing is with the S&P right now or during this period is that we are having the earnings session. earnings season for the US companies for the second quarter 2024. So it's something that I would advise you to look at, because during this week, I think we will be having the announcements by the Magnificent Seven, the biggest seven companies. So yeah, let's have a look on this. What's the difference between the time frames? How do you determine the time frame to trade on? I won on my gold trade tonight. Thank you for the insight. Okay, wait, I'm missing some questions here. What's going to happen to gold short term? Because you did the long-term analysis, right? Yes. And I followed it by the short-term analysis, which is a price channel. So I'm a little bit bearish on the short term. I won on my gold trade tonight. Thank you for the insight. You're more than welcome. Happy for you. What's the difference between the time frames? How do you determine the time frame to trade on? My personal trading or the analysis work? Because the analysis work I do, I try to include all of the time frames, okay? Because we have to do this top-down analysis. So we start with the weekly, daily, going down to the 8-hour and the 4-hour time frame to provide you, or to try and provide you with a weekly insight on what to happen, what is expected to happen. My personal trading, because at the end of the day, I am a personal trader. I used to do short-term trading, 1 hour and 15 minutes time frame. But to be honest, recently, because I have a lot of things to do for my full-time job here at PU Prime, so I'm not able to trade on the short-term time frames. What I'm doing right now is I'm shifting to a swing trader, because I just, determine supply and demands on the longer time frame, do it, or add to it some fundamental analysis, and I trade, swing trades, and I'll just leave it. So that's my personal thing. It depends on the time that you have, how much time you can stay in front of the charts. To be honest, personally, I'm telling you, the shorter time, the better. Thank you, sir, for your wonderful insights. Selfless act you carrying out here. Much love from Nigeria. Thank you very much. What's the significance of time frames? I think I've answered this. Thank you for the analysis. Thank you. Thank you for your efforts. Thank you for your daily live, and good afternoon. Thank you very much. Can't wait for the buying and selling zone webinar. Supply and demand. Wait for it shortly. Thank you so much for that. Okay, I think this concludes our session. Thank you very, very much, everyone, for your feedback and your engagement with me. It has been a great one. And of course, as we agreed, please make sure to follow the analysis page on puprime.com website. I will be posting some analysis there, long-term fundamental analysis. Make sure that you don't want to miss those. It will definitely give you a huge understanding of the fundamentals behind the market. And of course, I'll meet you again next week on Monday, the same time. And hopefully, when I see you again, you will not be on huge losses, because as I said, this week will be a huge one. It will be a volatile week. So please make sure you don't trade with big lots or big volumes. When will be the next webinar for the supply and demand? Just follow the page, and when I set the date, I will definitely announce it on our social media. Thank you very much, guys. If by any chance we have someone here today with us who speaks Arabic, I'll be live on our YouTube channel, the Arabic channel, after literally 9 minutes to provide more analysis, daily analysis to our clients in the MENA region, but this will be an Arabic session. So if you want to follow me there, that's absolutely a pleasure. Thank you very much. I'll see you guys next week. Please take care and stay safe.